Hi, Corinne. Thank you very much for joining us today. How are things in Florida?
Hey, Jimmy. Good. Thank you. Thank you for having me and very much looking forward for our discussion today.
Corinne, before we do a deep dive on lithium producers and valuations, why don't we first start with a brief discussion of your team, the Lithium and Clean Tech Group at Deutsche Bank. How many people work on the team and what specific sectors do you cover?
Yeah, so I lead the effort for equity research for Deutsche Bank for lithium and clean tech, as you mentioned, since 2021, but I have over 6 years of industry experience. So our current coverage include 8 companies, but half of it is on pure lithium players. We also have a rare earth material company under coverage, and then a long duration energy storage company. On lithium specific, we cover SQM, Albemarle, Lithium America, and Livent. So basically all the US-based or dual listing companies that have already production in place or that are set to have production very soon.
And do you only cover producers or do you also look at developers and explore codes?
Mostly producer. I think, if you consider Lithium America still in pre-production, also it will be up and running over the next, I would say 3 to 6 months. So that's the only company that we're looking at for the moment.
So let's move on now and discuss the valuation of lithium stocks. In spite of what's happening in the global markets in 2022, anything and everything associated with EVs and battery metals is doing very well. Spot lithium prices are at or near all-time highs, around $70,000 a ton. SC6 or lithium concentrate is also at or near all-time highs, around $4,500 a ton. So I want to spend some time on how this is impacting equity valuations. And why don't we just start with lithium producers such as SQM or Livent? Do you use a cash flow multiple or do you look at EBITDA, or exactly how do you value lithium producers?
Yeah, that's an excellent question. Definitely a hot topic for investor. And we have seen quite a lot of changes over the last 12 months, as you can imagine with the space. I think there is few components to take into consideration. The space has attracted a broader base of investor over the last 12 months. And, I think ultimately 2-3 years ago, it was really people on the buy side, focusing on mining or specialty chemical, while now we also have generalists looking at the space, ESG focus funds, and also, actually investor that's look at the other side of the supply chain, looking at EV, but trying to understand, does it make sense to look at the upstream? Because to come back to valuation, when you look at the valuation right now, they are pretty attractive. So for producers such as, SQM, Livent, or Albemarle, we look at it on an EBITDA basis. So EV to EBITDA multiple. And I think there is few reasons for this. Those companies are well established. So meaning they have already a recurring revenue stream. They have been in operation since quite some time. So I think it's make it I would say more easy to forecast and also predictable to try to get a look at it. And it's also make it easy for obviously the sell side, but also the buy side to make comparison between the company. And obviously, they have specific to each one. But I think, we're looking right now in our valuation, at least at Deutsche Bank, we're looking at multiple ranging from 9 to, I would say 15 times 2023 EBITDA. For company that are not producing yet, so such as Lithium America, it's a different approach, and we're looking at cash flow and NAV. And I think that makes sense. Again, such company do not have recorded EBITDA yet. And especially in the case of Lithium America, they have a JV in Argentina, which will not directly flow through the income statement. So I think for any company that are still in pre-production stage, I think looking on the NAV or DCF valuation basis is what makes sense.
So just to clarify for producers like SQM, you use EBITDA multiple, and for a near-term producer or an advanced developer like Lithium Americas, you use a cash flow multiple?
Yes, that's correct.
And when it comes to using these or determining what the value is of these various producers, what long-term lithium price do you use?
Yes, that the key question I think within the industry. We have a 2025, so which I consider more like a long-term price of 25,000. And I think this is we have the view that China, so spot prices and seaborne would converge ultimately. I think it's also you might have a slight discount for the seaborne of the contract price, but I think overall the industry has been focusing on trying to get like more flexible pricing structure in place. We can just look at SQM or Albemarle. I think this has really been like a company focus over the last 12 months. I think the days of having lithium pricing at 5,000 or 8,000 per ton are long gone. I do not think that we are going back to those cycles. And you will definitely hear a different view out there from sell side, buy side investor that we kind of have reached like a momentum and it has peaked. I am from the view that I think we have entered more like a super cycle, if we can talk about it. Obviously, that doesn't mean that it will be always, pink and straightforward for the next 10 years. You might have some small bumps around the road, but I think overall, the lithium thematic and the lithium investment thesis is in place. And I think that's really what's beyond the pricing. I think that 25,000 per ton, we view it more as an incentive price as well. If you look at projects that are due to come online over the next 5 to 8 years, I think that incentive price has definitely go up. Ultimately a few years ago, we were talking about 10, 12,000 per ton. I think, there is inflation going on, there is new technology to put those projects in place. Permitting is also a key component in delaying some projects. And if you factor all this together, I think that just kind of, we just need like a higher price base. So therefore we have our $25,000 per ton.
Corinne, earlier you mentioned that spot lithium is trading around $70,000 a ton. What lithium price are the stocks implying right now?
I think it's another great question. I think, you have to look at each company specific and obviously understand as well what has been the strategy in terms of moving away from those long-term, what we call legacy contract, which add like a fixed price contract. But I think for, major producers such as Albemarle or SQM, I think we have moved away to go, I would say high 50,000 per ton. SQM reported a 54,000 in 2Q. Albemarle is a little bit lower than that, but I think going forward, this is also what is being implied. And again, I think it's important to see that I would say that pricing momentum has likely peaked. At least this is our view here. It doesn't mean that we do not have further growth ahead of us and that there is no further upside to be priced in the valuation, in the equity. But unlikely we will see, a sequential quarter over quarter price growth of 30% or 40% going forward, as we have seen in the previous few quarters. So I think I would say that's the range of price that has been priced in right now. Further upside, just at a more moderate pace, is ahead of us for the industry.
So as we speak, the producers are trading at a huge discount compared to where the actual spot price is.
Yeah, I mean, you have to you have to keep in mind that the spot prices is a small portion of the market. So definitely, I think the industry is focusing on spot, while at least maybe 6 months ago, probably 10 to 20% of the global transaction were really based on spot prices. So I would say you always have had, and you will always have some sort of disconnect between realized pricing, the price that is priced in the evaluation, and the spot. Even if we have more flexible pricing structure right now in place, it is unlikely that we will have a one-to-one even over the next few months. So I think you will have that kind of discrepancy. In terms of valuation, I think this is expected, and I think this is understood, that again, it will not converge. And I think beyond just the pricing, what does matter for valuation and for each company specific is looking at the growth profile and the expansion profile. And I think that's really the two key ingredients that investors want to look at. Do we have a flexible structure in place for pricing? Meaning, can the producer really, I would say, maximize their earning power? And then the second is like, which kind of growth are we talking about? Are we talking greenfield? Are we talking about just expansion? Because obviously there is a difference of timing as well going on with that.
And I want to just touch on margins. What would be the cost of production for a ton of lithium in Argentina or Chile?
That's yeah, very good question. I would say that historically, Chile for brine has been the lowest cash cost producer. So if you look at company like SQM, Albemarle, I would put probably like a broad range, but anywhere between $3,000 and $4,000 per ton, or even slightly lower a few years ago. This was what it is. We are still at this range. Argentina, if you look at a producer such as Livent, who has already been in place and in operation since a few years, you're likely also in the same kind of range. For any new producer, such as Lithium America or any of the projects that obviously we have all seen in the news and headlines of Argentina, trying to attract new investor, I think those projects will see higher costs and a higher base. The reason is most of those projects are very remote. You're going to require some additional capex versus some of the projects from SQM or Albemarle. Infrastructure is not in place, so that will be one spending, and then just the difficulty as well sometimes to bring the brine down and to just bring it to the port, which I think will further contribute to higher cash costs. And I think if you look on the spodumene side in Australia, you will, I would say, probably keep the trend of green bushes and Wodgina probably at the lower side of the cash cost curve, and we're talking about $300 to $350, $380 per ton for spodumene there.
All of the lithium producers are all up double digits on the year, but the one name that really stands out is SQM. It's up 90% year to date. Why is that outperforming so much?
Yeah, I think few reasons behind this, and I think the first important step is actually to take a step back and look at what happened last year. SQM underperformed last year versus peer, and the main reason was really the geopolitical risk or tension, I would say, from Chile, which did weigh down on the stock. We saw it over the summer last year when there was a lot of news and headlines on potential nationalization of the Chilean mining and lithium industry, and then once again when the president was elected back in mid-December. While SQM is I would say more impacted in terms of like trading volatility versus Albemarle, we believe it's just a question of perception. I think the buy side and investors do not fully appreciate the other non-lithium division business from SQM, and just purely see it as a pure lithium Chile-based company versus Albemarle being a little bit more geographically diversified. So you come from a very low base from last year, and since then I think we have seen most of the political risk being removed. That being said, let's wait until Sunday and see what's happening with the constitutional vote. And I think the stock has just been performing on the back of that. The second reason is, I think the company has been pretty active in moving their price structure. And I think has been probably the first one in the industry to actively look for this. So you now have 2022 volume, you have about 70% of those volume on, what we call short-term contract index, 15% spot, and then 15% only tied up to like longer-term contract. So you have a significant, short-term / spot price exposure at 85%. And you just see it from the earning power, you have an EBITDA that's, in our number, at least is set to, multiply by 4 or 5 times versus last year. And I think the market is appreciating, obviously, that.
I want to move the discussion now toward M&A. 2021 was a big year for M&A. The biggest deal was Australia's Orocobre bought Galaxy Resources for about $3 billion, making it the 5th largest producer in the world. Earlier this year in 2022, we saw a bidding war for Millennial Lithium. Eventually, Lithium Americas won that asset. But do you think consolidation continues in 2022, especially with those assets that are based in the Americas?
I think consolidation continues and will continue, but it might just take a different form. I think, what we saw with Orocobre and Galaxy was, at the time it happened, it was called a mega merger. I think it was one of a kind for the industry. We haven't seen significant market player coming along together. But I think just looking at the industry, this is a pretty much fragmented industry. But I think it's hard to really see pure M&A move really happening. I think what we're going to see is more like an upstream and downstream consolidation or partnership, if you want to talk more that way. And I think it makes sense. You have OEM that, for various reasons, in North America or in Europe, feel pressure to move to EVs, right? What the missing ingredient for EVs? This is lithium right now. So they need to secure the volume. Pricing is the second actually argument, but volume is really the key ingredient that they need to look for. And I think in order for them to have a more control on the supply chain and therefore also on pricing, they will go upstream and just do partnership with like any junior company. We have seen it, in Argentina for the Cachi project. We're seeing it as well, with General Motors and Livent and offtake agreement, but with an upfront payment. So I think this is the kind of I would say M&A or consolidation move that we will continue to see. And I would say over the next 3 to 5 years, I just expect that to further increase.
You work for a very large U.S. broker and you speak with some of the biggest investment funds in the world, pension funds, hedge funds, family offices. What group is showing the most interest within this sector?
Yeah, very good question. And I think, I had started actually to talk a little bit about this at the beginning of our discussion, but I would probably put them in 3 different categories. I think you have investors that look purely at mining or industrial names, and therefore, lithium makes sense. Also, keep in mind, I think the interest obviously has increased a lot with the spot pricing, but also with, again, those producers being able to have significant growth quarter over quarter in the context of most other industrial names having a very different story and having to guide down for most of them. So I think lithium in that sense really shined in 1Q and 2Q. And then you also have investor looking, ESG thematic. And I think, it's probably fit the bill, I would say, from the EV thematic. And, it's another conversation for another time, but I think the market recognize the ESG profile from lithium while also recognizing this is not the perfect solution, right? But we keep that for another time. And I think the third bucket of investor are also the one that actually used to look more at the downstream. So investors that look at automakers and OEM and EV maker. And, as there is more and more talks about lithium, I think those investors have started to become more interested looking up the supply chain and to turning towards the upstream. And I think, it's the argument is valid, it's where are the margin? And I think the margin right now are with the upstream and somehow a little bit as well with the midstream, but it has definitely moved up from downstream to mid to upstream. And I think that's why what's that sparked the interest from many investors from that side.
Corinne, as we wrap up, Deutsche Bank is always putting together some amazing conferences. Do you and your team have any conferences coming up here in the next few months?
Yes, we do. So we actually have two large events. The first one, September 26th, which we are co-hosting with Raw Motion. It's a full day event in New York in person, and we will just be talking everything about EV and energy storage. And then a little bit later this year, December 7th, this will be virtual actually this year again, but we are hosting our annual lithium and battery supply chain conference. So we have all the major lithium producer and then midstream as well market player, and we just offer a discussion and investor meeting at this conference.
Corinne, that was a fascinating discussion on lithium valuations, and I want to thank you for sharing your insights with us today. Once again, thank you.
Thank you. Thank you for having me.